To move on and talk about the IT earnings because that's been in focus. Abhishek Kumar, equity research analyst at JM Financial, joins us now. Abhishek, good morning and thanks for joining in. What are your thoughts first on HCLTech, the numbers, the fact that the company has maintained its revenue guidance, and how you're positioned on the stock now?
Yeah, hi, good morning, Sonia. Thanks for having me here. So HCL's earnings also, like TCS, were slightly above expectations. In this case, the decline was lower than what we were anticipating. And also they did slightly better on margins. However, they have maintained the full year guidance at 3 to 5% and also for margin guidance 18 to 19%. So I think both these results, the better than expected results, is as much because of a more realistic guidance or expectation at the beginning of the year than any change in the underlying demand environment. So that's how I would view the outperformance of the result. In terms of stock, I think HCL is already trading at one standard deviation above its past 5-year mean. And because they have maintained the guidance, there's no earning upgrade. So I wouldn't really see this as a very positive in terms of stock performance. So we have a hold, and I think the current valuation are fair value on the stock.
Okay, fair value on HCLTech. Hi, Abhishek. Good morning and good to see you in. This is Nigel on this side. I wanted to ask you about TCS because that's the one that clearly fired up the entire sector. Now, TCS used to trade at this premium in comparison to other tech names, and that's narrowed down, with the recent rally. Do you think that TCS still should command that premium, and because of that, a little bit of a higher PE multiple from here on? Given that, the ratios are more favorable, the growth is likely to be better as well.
Yes, so you're right. TCS has traded at a premium to other large cap peers. But, when the demand environment improves and the discretionary spend comes back, that is when I think that premium kind of narrows. TCS is a much better play in bad times because it has a very steady ship, whether it is top line or margins. And also, in terms of just growth acceleration into FY26, we believe the acceleration for someone like an Infosys or a Wipro would be faster. TCS would be slightly lower also because the BSNL deal, which is contributing to the growth this year, will be absent next year. So that becomes a headwind. So I think, the narrow of premium at this stage is sort of justified in my mind.
Abhishek, hi, morning. Just a two-part question. From here, what from playing the results point of view, or if you are in a bit of a move up, what are the best ways to make money? What stocks to your mind? And second, both, to my mind, both TCS and HCLTech, they didn't really it was not a blowout number or anything. There was no real big change in commentary from the TCS management. I spoke to them, asking them specifically if they'd be willing to call out a turn in underlying demand conditions by the end of the year. Well, they were not. And of course, we know the HCL numbers now. So unless Infi on Thursday does something spectacular, do you think this is more of a tactical kind of a move that we are in, if this is that?
I would tend to agree with that. I think, and we saw this in January after the Q3 results. There were beats, and all the stocks rallied. Yeah. But it didn't translate into earning upgrades later on, and that's when we saw the correction in the stock. I think there are enough evidence that the worst is behind the sector, right? And there are no earning downgrades, material downgrades coming through. At the same time, earning upgrades are not happening. And the valuation buffer that we had maybe around April, May, that has gone away with the recent rally. So I would say that the stocks could consolidate before actually the earnings would start coming through.
Okay, thanks a lot for joining in and have a great week. That is the word on the IT space, and looks like the worst seems to be over, at least from a market standpoint.